Real estate and financial experts, making sure you win in every market. Your financial partners, Don and Gino.
I promise I'm not going to let you down. I'm going to bring Dan in and let you know what just happened in the Dodger game.
Well, the Dodgers just scored another run.
Hey, that's a good thing.
Juan Uribe just doubled and drove in Adrian Gonzalez. And Andre Ethiers on third, so they may even have a chance to score another one. But that's a good thing.
I
Little
like
trivia
that.
fact. Adrian Gonzalez lives in my neighborhood.
And tell us where that is.
Scottsdale, Arizona.
And how are you going to deal with the 140-degree heat in the next 2 months coming up?
It's a dry heat.
It's a
You know, I told my friends
I've
that.
never heard that before.
When I moved here, or when I moved there, I told my friends I was moving to Arizona, and they said that same thing. And I'm like, it's a dry heat. And they're like, so's the oven. Put that on 140. Put your head in there.
Yeah.
You know, I love the heat. I've gotten, you know, I'll take the heat over winter any day. And there's limited humidity, so
See,
I like it.
my skin does not like the sun, and I don't agree. Let's put it that way.
Yeah, neither do I.
Yeah,
I burn like a.
Right, I'm a tomato.
Yeah, in fact, if you'd like to see Dan as a tomato, go ahead and log on to donandgino.com. He's kind of a rosy pink right about now. It's just 2 days at 90 degrees and he's turned pink on us.
Yeah, I use SPF 50 every time I go out in the sun.
Yeah, well, I used to be that way, but thanks to our show producer Shannon Fosnaw, she and I spent some time during the Afterburn Fitness Challenge, and as part of our before and after pictures, we had to spend some time in the tanning salon. I didn't want to break the camera.
Did you get the spray, or did you actually go?
No. We went legit.
You went legit.
Yeah, cancer lights. Yep, for sure.
Did it make you itch? I've
No.
done it like one time in my life, and it just made me itch terribly. It was like.
Oh, yeah. Shannon says he needs a better bed. Well, I promised to make this valuable for you today, but I definitely wanted us to have some fun and talk about what's going on with our heat, since we have a guest from Arizona, PJ Harrigan with Radian Guarantee. And the topic of today's discussion is mortgage insurance. And you gave them a small snapshot of mortgage insurance, but give them a little detail about who it protects and why it's beneficial. Just give us a snapshot of mortgage insurance, and and then Dan and I will go into some of the benefits of it as well.
I think the biggest question is, first and foremost, is what is mortgage insurance?
Well, mortgage insurance is the first level of protection for the people who lend the money for you to buy a home. And what it allows is people to get into a home with less money down. So it gives investors confidence to invest in the bonds that back the home loans because of this mortgage insurance. So if you were to buy a house with 5% down, there's mortgage insurance that actually protects the investor down to, say, 68, 65% loan to value. And that gives those investors, the people that are investing in the mortgages, which may be your 401k, your IRA, your pension fund, individuals, the confidence that they're going to get their money back on your investment.
So when you say it protects them, that means if the borrower defaults on the loan, they will pay up to 30 to 35, 25% of the loan amount to the current investor, so that they're protected.
Yes, exactly right.
Gotcha.
So it just helps them have the confidence that they're going to get their money back. Because what it does is it offsets if that borrower does go into foreclosure and they have to sell that home as a foreclosure. Usually there's a hit on what they have to sell it for.
Yeah, in the equity.
In the equity, this gives you the cushion to pay for that or cover that.
So that's it. That's the wonderful story of mortgage insurance. Very interesting.
Well, that's kind of from a mechanical perspective. But what it means from a consumer perspective is, because of MI, consumers can get into a loan with 5% down, versus having to save and save and save to be able to put 20% down. And then also, what it does is, and if you want, I can tell a story that I have.
Go ahead and tell that story. And you're listening to PJ Harrigan with Radian Guarantee. We're discussing mortgage insurance. So as you listen to this story, think about the relationship between banks and consumers and how we get loans today versus how it was a few years ago. Go ahead.
And when I talk about this, I like to use the movie It's a Wonderful Life. And in that movie, George Bailey runs a building and loan, a small savings and loan. And if you remember the movie, there was a kind of a run on the bank. and people wanted to get their money out, because what George did is he took the money from the community that they would invest with him into savings accounts or whatever, and he would take that money and then lend it to other people in the community so they could buy homes or build homes. And it was a asset liability matching, if you will. And when people wanted their money back, what he told them was, well, I can't go to the Martinez's and get their money out because it's in their home. They're paying us back monthly, and then I pay you monthly. Well, that's the way it was before we had private mortgage insurance. That was how it was before we had Fannie and Freddie and Ginnie Mae, the people who helped pool these mortgages and created the secondary market. When George Bailey in that savings and loan environment, you had to have 20% down. And not only did you have to have more money down, but it cost you more, because since he was paying people who invested their money in the bank a return, he had to charge you more. So I've always read that private mortgage insurance not only lets you get into the home with 5% down, in some cases even less than that, it also saves you about 2% in interest costs. Because if you look at it today, if you were to go to a bank and try to get a mortgage that they were going to portfolio, first, they're not going to do a 30-year mortgage like you can get. And if they were, the price, the cost to you as an interest rate would be a lot more.
So you're listening to the Don and Gino Real Estate and Finance Show, and that was PJ Harrigan with Radian Guarantee explaining kind of the layman's perspective of what's happened and how poolings has started, securitization has begun, and why mortgage insurance is important. And the interesting thing for me when I read what you were planning on talking about today was, I've never heard of it as an interest savings, but it absolutely is, because it allows you to acquire a mortgage at a reduced interest rate because you don't have to deal with portfolio lenders. Now, we haven't had a lot of portfolio lenders to deal with, Dan, over the last 5 to 7 years after the big market crash, but they're making they're popping their head out, aren't they?
We just got a couple, didn't we?
Yeah, we just saw a couple portfolio lenders come in here, start talking to us about their products, and I'm going to call it dipping their toe in the water. They're not totally aggressive yet, but there's a few banks that are saying, hey, we're willing to do things that are, we'll call them just missed products. They're just outside the Fannie Freddie box. Maybe it's loan amount, maybe it's how long out of foreclosure. But all of these, Dan, and you notice that they're either high down payment or high reserves. They're saying, we're going to take some risk in some other areas, but you're going to put a lot of money down, or you're going to have a lot of money in the bank to make sure we're protected.
Right, and PJ, you hit the nail on the head when you said that those portfolio banks, their 30-year rates are awful.
Yeah.
And they are, and you're not lying, they are awful.
You think about it, if you think back to the S&L crash, which was in the 80s, what got the S&Ls in trouble was they were lending 30-year money, but the asset that they were backing, or excuse me, the liability they had to the consumer was much shorter term. So there was a mismatch because they gave 30-year money. So they don't want to do that again.
Yeah, in fact, so one article that we discussed then right now is interest rate savings versus portfolio lending. So if you didn't catch that, go to donandgino.com. You can always go to the catalog of our old shows. This show will be cataloged and probably on our YouTube channel. If you go to our YouTube channel, just go to donandgino.com, hit the YouTube logo. That'll take you to a catalog of 3 years worth of shows. And it's kind of nice when you look at 3 years worth of shows and you could see the what I like to say is the progress of our economy, because almost every show when Don and I started was about distress and bankruptcy and credit card debt and all these horrible things. And today we have the benefit of having PJ Harrigan with us today to discuss the tools and advantages we can utilize in today's market to acquire, and this is what I'd like us to go into next, boys, is to acquire a property that you wouldn't normally be able to acquire with a reduced down payment in an appreciating market. And I think that that's the number one conversation that I have with my borrowers about not waiting to purchase something because they can utilize mortgage insurance to purchase today and gain appreciation going forward.
Definitely gives them advantage of being able to buy sooner. I read a statistic put out by USMI, which is our trade organization, that says the average fireman would have to work 20 years to accumulate the wealth to put 20% down. So 20 years.
That's a long time.
And look at how much they're missing out there. We talked earlier before we came on about if you rent I like to say you're paying 100% interest because that you get no benefit from that rent other than the roof over your head. You don't get any type of tax savings, and you don't get any opportunity for appreciation. So 20 years of putting that off is a long time.
Yeah, in fact, if you think 20 years ago, right, because, people remember the crash because very recent, but our memories are selective. If you think about 20 years ago, right, so what is it going to take you to? 1994. I highly doubt there's hardly any property in the nation today that's worth less than what a property was worth in 1994. And if you would have utilized mortgage insurance in 1994 like we utilize it today, it would have been a very profitable venture for you.
And plus, think about it this way. Year over year, we're up 10%, 11% on...
10% year over year. Numbers
So
just came out.
You did this last year. You used mortgage insurance. You bought a $400,000 house. You just made $40,000 in equity.
In fact, that's something I absolutely want to focus on. So when we get back, let's compare appreciation versus cost so that we could see the value and the power of mortgage insurance and the different ways we can use mortgage insurance, because there's not just one option. There's 3 or 4 different ways.
Bunch of different options.
Yeah, that Dan and I utilize on a daily basis here at Cherry Creek Mortgage. So when we come back to the Don and Gino Real Estate and Finance Show, we'll tip you in on how mortgage insurance can make you thousands, if not tens of thousands of dollars.